Hey, what's good, YouTube? This is Chris Hendricks. Today I'll be looking at US30. I'm basically making a trade, selling US30. So I'm just going to explain how I got about the sell. So let's quickly jump straight into it. Let's see what we have. Okay, I'm just loading. So I posted a video about a few days ago actually with the previous setup. I'm sure you guys have seen it. If you guys haven't seen it, please check the link down in the description. Or actually, let me just add the clip right now.
So you can see that we have 3 touches on our structure, which is exactly the same with Nasdaq. And remember, the third touch, this one right here, we have the highest probability, right? So for a risk entry, you could have entered right there. Let me just zoom in. So you could have entered right after rejections and reversals. So you could have sold right there, scaled down to the downside. Just like that, right?
Okay, so you guys have seen the clip and how I explained the sell that I got previously, which is this massive drop right here. So right now what I'm looking at, right? So let me just give you a quick overview of this setup basically. Let me just erase everything. Okay, so basically when I do my setups with indices, I don't really go up to the 1 hour, 4 hour, the higher time frames. I just take it off from the 15-minute time frame and get my support as well as my resistance right there, so you guys can see it. So within this basically like a channel, we need to figure out the structure that we have, and I'm going to be using the trendline tool. And as you can see, this was an uptrend, basically a structure going to the upside to our resistance right here. So I'm going to quickly draw my support of the structure right there and get my resistance. So basically I'm going to start off here, connect it to the other touches. So my trading strategy is that a structure should usually have 3 touches, with the third touch having the highest probability, right? And if I can just point out the number of touches that we have, or before I get into the now, in terms of a sell, say you're looking for a selling setup, right? You will only focus on the resistance of the structure since you want to catch the sell. And if it's a buy, you will focus on the support of the structure since you want to catch the buy, right? So in this case, we focused on the resistance since we were selling this setup. And we need about 3 touches for us to have enough confirmation for the sell. This was our first touch. We have our second touch right there. Then lastly, our third touch, which has the highest probability. So this is the most important touch on our trend line. And in regards of confluence, confluence means that you should have at least more than one reason to get enough confirmation. So far the confirmation that we have here is we have this resistance which is being respected right here, giving us some sort of double top. That was the first confluence, right? And then the second confluence, or the second reason for us to sell, or confirmation, is that we have 3 touches on our what do you call this? Our resistance. 1, 2, 3, right? Which is perfect. So we focused on the third touch since I told you guys it has the highest probability. So you need to check how the price actually got to this point, to the third touch. So in regards to the price movement, when a price gets to, say, a level, it either gets there in an impulse, moving just straight up with no distractions, or the price could get there correctionally, right? So what you want to see in terms of a reversal, when the price gets to a level, you want the price to get there correctively, because we have only 2 types of corrections. We have a continuation correction. Okay, hold on, let me draw it like this: impulse, and then we have our correction, right? In this case, this correction is a continuation correction, right? And then the second type of correction that we have is a reversal correction, right? The price is probably going to reach a level and then reject from it, right? It reverses. So those are the only 2 types of corrections that we have in the market: a continuation and a reversal, right? So let's look at what we have right here. You can see the price, hold on. You can see the price actually got there. At first, it did this massive impulse and then it started correcting. So this tells us we might have a reversal, right? Why would we have a reversal? Because of this level, this resistance right here. So that's our third confirmation, right? So in case of a reversal, we still look for 3 touches, right? We have this first touch right here, second one right there, and you can see this is the third one. So still, same thing still applies. 1, 2, 3, and we zoom into this 1, 2, 3, right? And you can also draw your support, but you don't really have to, but you can also do that, because in this case the support is not really that important, unless if you just want to wait for a breakout on the support and then enter right after the breakout. But say you are not that kind of trader, you take a risk entry. So basically you would look at the third touch, which is this right here, right? Let me just change the color to, okay, no, to a, what color should I pick? Comment down below if you want me to choose your favorite color. I'm waiting. Okay, blue is your favorite color. Okay, that's cool. Let me just make it a bit bright. So we have our third touch right there that we're focusing on. So what you want to see on the third touch is price rejecting, right? So let's just quickly zoom in. So you can see we have so many wicks, right? But don't mind the wicks. We're only going to focus on what kind of candlestick that we have. I'm using the Heikin Ashi type chart. It's a bit different from the normal candlestick chart, right? But you'll probably see something similar. So with this one, you can see that we have the last candlestick, the last bullish candlestick rejected so much. It was a small candlestick, and then the following one, we started getting bearish candlesticks, right? And the second bearish candlestick had no wick on top, which shows momentum to the downside, right? You can see that. And the third one, it's still bearish. So 3 candlesticks were bearish all in a row, right? Which means now the price is turning. You have enough confirmation. First, you had the price respecting your high, okay, and then you had the trend line, which was the second confirmation, and then you had your price getting to your third touch of your main structure correctively, giving you a 1, 2, 3 touch formation as well. That's the third one. And the fourth confirmation is that on the third touch, which is, the circle, this area within the circle, we have 3 bearish candlesticks right after the rejection. That means now we are comfortable to enter at the opening of the fourth candlestick. Usually in higher time frames, you just wait for 2. You could have entered on the opening of this one or this one, basically, right? It's your preference whether you just wait for 2 candlesticks to form for you to have enough confirmation, or 3 candlesticks to form. But usually on the third one, the price would have moved so much. So usually just wait for 2. But in this case, since the price was so choppy, giving us so many wicks, I decided to wait for 3. And that's where you execute your sell. And in regards of your stop loss, right, you put your stop loss at the highest, right above the highest point of the third touch, which is within these 2 weeks right here. Let me just zoom in for you guys to see, because I know you guys are probably watching these on your phones, so it's cool. So you just gonna put your stop loss right above the highest point. And let me zoom out, and then you scale down to your support area, right? So that's how I got the previous setup. And the price is probably gonna reach the main support, not the support of the trend line or structure, this main support right here. So the price moves into movements, right? Either an impulse, correction, impulse, correction, impulse, right? So keep that in mind. From this point right here where you entered your sell, what we have here is a huge impulse, right? Huge impulse. And what do we have right after the impulse? Correction, right? And remember, we only have 2 types of corrections: continuation correction or a reversal correction, right? We only have those 2 types of corrections. So what do we have here? What do we have here? Just take a guess, comment down below. Okay, some of you guys are saying a continuation. Those who are saying a continuation, you guys are correct. Okay, so let's just figure out the parameters of our correction. So in terms of a sell, you focus on the resistance. So you can go ahead, take your tool, whether you're gonna use a horizontal block or trend line, doesn't really matter, right? So I'm just gonna take my horizontal, right? And you can also get your support as well. can get your support right there. Okay, let me just quickly plug in my laptop because it's dim right now. Hold on. Okay, now we're back online, we're good. So same thing applies. You wait for the third touch. Third touch is the highest probability. So let's count the number of touches that we have on our resistance using this arrow. So we have our first touch right there, second one, and the third one. Third one has the highest probability. You guys should never forget that the third touch always has the highest probability. So since we got the third touch, we focus on the third. You guys can also scale down to the 5-minute time frame to see how the price got to the third touch, but it really, in the case of a correction, you don't really have to do that, but let's, for like illustration purposes, let's just look at it. So you guys can see from this point we had an impulse and then the price started correcting, right? So if we count the number of touches on our resistance, you guys can see it's 3 touches as well. 1, 2, 3. So you wait for 2 candlesticks and then you sell, right? Okay, let me just go back to the 15-minute time frame. So this is the setup that I'm taking currently. I'm gonna be using this pattern. So we wait for 2 bearish candlesticks. So this was our first bearish candlestick and then our second one, right? So just focus on the second one. You can see we have no wick on top. We don't have this thing right here. That's what I'm referring to, a wick. It just opened and then sold off, which tells us that it is showing momentum. It has strength, right? So we open at the opening of the third candlestick right there, and then we scale down and we put our stop loss right above the highest point on our third touch, which is this wick right here. Let me just zoom in because you're watching this on your phone. I know. So this is the highest point, as you guys can see, this wick right here, this bullish wick, highest point. We put our stop loss right above it and then we scale down. So let me just zoom out and you can see the price already sold off. And by the way, I already took this trade. We sold off and now we figure out our take profits. We can put our take profit right there at this zone right there. And you can also wait for the price to also get to the main support, but in reality the price is very unpredictable. It might not even reach that point. It might sell off and just bounce right there. So you always have to be ready, at least secure some profits once the price gets to this point. And then if the price does break the zone, that means more profit, which is very good for us. And then you secure your final profits right there. So that is the setup that I am currently looking at. US30, I already sold, entered right there. Today is Tuesday, the 19th of September. And yeah, that is it for today's video. I hope you guys liked it. It's probably short, Okay, let me just look at another setup, right? Let's look at German 30. Let me erase everything. Okay, let me not erase. Let me just explain well. So you can see it's very similar. These are the past trades I took. So from this point, we had a resistance, which the price got rejected, sold off, right there, giving us this nice impulse, right? This impulse right here, followed by a nice small correction, which would have been much clearer in the 50-minute time frame, and you would have sold off, right? So remember, impulse, correction, impulse, and this is what we have right here, as you can see, right? Let me remove this so you guys can see it clearly, right? As you can see, and now we're about to have it again right there. So that's the reason why this is also a sell, but I'm not taking it because I was way too late. I didn't see it at this point right here. It already sold off by a few pips, and you know, indices few pips is a lot, so I can't enter where it is right here because it might pull back, come back to the support, this resistance, sorry, and then sell off again. But for us, it will mean that we'll be taking so much losses and possibly blowing our account if you took a huge risk, right? So I'm just gonna ignore this one, but it's a sell as well, very similar to this sell right here, very similar. So it just happens that German 30 and US 30 are both selling. US 30 is down by 0.25% currently in the 50-minute time frame, which is good. So once again, thank you guys for watching this video. Make sure you watch the previous video that I uploaded. I'm gonna make it available for you guys to quickly access it easily. I analyzed NAS 100, US 30, German 30 as well. All three pairs in that one video. So yeah, I just hope you guys watch it. Thank you guys once again. I probably thank you guys so much, but yeah, thank you guys for your support. Make sure you like, subscribe, probably share this with your friends who are interested in trading. And yeah, till the next video, guys.